Hello, I'm Adrian Finnegan, and this is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, central banks are hoarding gold and increasingly moving their reserves back home. Will the rush for the precious metal continue? Also this week, fired over posts on his X platform, well, Elon Musk has told employees treated unfairly by their bosses that he's got their backs. Plus, the textile industry is often called the backbone of Pakistan's economy, but the sector is bearing the brunt of the nation's financial crisis. It is precious and often serves as a safe haven, a hedge against economic uncertainty, an investment favoured for its stability. Traders, investors and governments have often looked to gold in times of market volatility. 2022 was an exceptional year for the yellow metal. Demand reached its highest level in more than a decade. Central banks globally bought a staggering $70 billion worth of gold. That's the most in 73 years. And now it seems the world is looking again to gold as a hedge against uncertainty. For months, banks had been selling off their gold stocks. Now they're back buying again. The World Gold Council says that purchases in the first half of this year were the highest on record. The biggest buyers, the People's Bank of China, Turkey, India, and the EU also ramped up their gold reserves, while Russia has been stockpiling gold for the past year as it tries to circumvent the impact of Western sanctions. So why do central banks like gold? Well, the metal holds its value during economic turmoil, unlike currencies or bonds. Its price actually tends to rise when the value of the US dollar falls. That encourages central banks to stockpile gold to diversify the reserves away from volatile currencies. Hedging against inflation is another reason why central banks hoard it. The metal has limited supply and tends to preserve purchasing power against rising prices. Nearly 1/5 of all the gold ever mined is held by central banks. The US has the biggest reserves. Many central banks sold tons of it during the COVID-19 pandemic to shore up their economies. Gold reserves are kept in underground vaults or stored with central banks abroad, including the US Federal Reserve and the Bank of England. Joining us now from Singapore is Nikos Kavalis, who is Managing Director at Metals Focus. He's a global precious metals expert. Good to have you with us, Nikos. It was Russia's invasion of Ukraine and the subsequent sanctions that triggered last year's gold rush. What's behind this year's pile into gold?
Oh, I think it's in many ways a continuation what we've been seeing for the last couple of years, really, crisis after crisis. The expectation, especially in the early part of the year, the expectation that the Federal Reserve would be forced to cut rates a lot sooner than the reality has proven it to be the case. That's what drove the price back above $2,000 an ounce. And look, more generally, gold has basically proven its mettle, and a lot of investors are looking to it as a diversifier. And central banks have been continuing to buy, albeit not as aggressively as last year. They're still in the bid.
Are there any particular countries, though, that are leading this rush? Who's buying more gold than anyone else?
Well, look, I mean, naturally, the countries that, in terms of reserve managers, the countries that have been over the last decade really buying gold are developing nations, nations that don't have legacy gold holdings as a result of being part of the gold standard. China, Russia, Turkey have been big buyers, although Turkey not this year. Turkey, in fact, turned net seller recently for various reasons. But yeah, some of the East European countries have been buyers in the last decade. But yeah, basically countries that, for lack of a better word, need to add to reserves because they're not already overweight like the Western ones are.
Nikos, what are the implications of this for the greenback, the US dollar, the reserve currency of the world?
There's no doubt that there is a de-dollarization underway. And in fact, it's been going on for quite a long time. It's not just in the aftermath of the war in Ukraine and the freezing of Russia's central bank's assets. De-dollarization has been going on since the early 2000s, as banks have been diversifying against the de facto reserve currency. I think it's a bit premature to start making long-term projections as to, let's say, its significance waning. And I think gold is also, it's part of that move, but I think it's a little bit, we can't really look at gold as the principal driving force of this
All right.
de-dollarization.
But to what extent, though, are the trend towards rising interest rates across the world playing into this appetite for gold?
Well, perversely, gold tends to lose out when interest rates are rising, right? Because effectively higher interest rates mean a higher risk-free or a higher cost of carry. So why buy gold which yields zero or at best a few basis points when you can instead buy treasuries that give you 4 or 5% returns? Having said this, we've seen a dramatic change in the reasoning or the way the attitudes of institutional investors. They're a lot less sensitive to that and a lot more keen on gold purely because of its having proven in the last 15 years and numerous crises that we've gone through, that it's a very solid, successful diversifier.
All right, Nikos, I'll be back with you in just a moment. A growing number of nations are repatriating their gold after a freeze on Russian foreign assets. Separately, Venezuela's government has recently lost an appeal to gain control of nearly $2 billion in gold held in the UK. The Bank of England refused to release Venezuela's assets, citing doubts over the legitimacy of President Nicolas Maduro's win in 2018. The nation's gold reserves fell by nearly 12% in the first half of the year, down to 61 tons. Nikos, Russia's gold reserves are stored very much at home. Other central banks, though, are pretty worried, aren't they? Because, as we can see in the case of Venezuela, it's easy to freeze gold assets that are held abroad.
Yeah, of course. Look, traditionally, as a central bank, you would want to keep as much gold as a big chunk of your gold reserve in London, because that's where you could basically mobilize it, lend it out, or if you wanted to sell it, it would be a lot easier to sell it there. When you were, if you were adding to your reserves, it would be a lot easier to just add to your local London account. But as you very rightly pointed out, the importance of having at least portion of your reserve home or away from the potential interference of Western governments, Western powers, is it's becoming very apparent. And I think the freezing of the Russian central bank's assets in the aftermath of the Ukrainian invasion of the Ukraine has amplified these sentiments.
Okay. All right. And what about Venezuela, Nikos? I mean, what are the chances of Venezuela unlocking its assets, its gold assets held abroad in the near future?
Well, it doesn't look very likely, right? I mean, the Bank of England is not budging, and frankly, this is also why we're unlikely to see massive sales from the Venezuelan central bank, because, as you very rightly pointed out, about more than half of its holdings are now effectively locked away and cannot be touched.
Okay, let's get back to the market.
Whether in the future it wins, we'll see.
Let's get back to the market. You mentioned that prices are hovering around, what, $2,000 an ounce right now. How much further do you think?
Well, no, it's now closer to 1900. It peaked above 2000 earlier in the year.
All right, that's fine. But
yeah.
are we set to see those highs again anytime in the near future? And look, we're not about giving financial advice on this program, but should the likes of me and anyone watching be thinking about investing in gold right now?
Yeah, look, we are, as you very rightly pointed out, we are not there to give investment advice. But what we can say is that we can see investors are still interested in gold. Even though the persistence of high interest rates is a headwind for the price, and we could see lower prices, we can't rule out that possibility. We still see very strong interest in gold, and that offers very healthy, very important support for the price.
Nikos, it's been great to talk to you on Counting the Cost. Many thanks indeed for being with us.
Thank you, Adrian. All the best.
Now, the iconic blue bird logo is gone and Twitter is now rebranded as X. Elon Musk is no stranger to making news. this time for outlining his vision for the platform formerly known as Twitter. Part of his plans include making the social media site a haven for free speech. In a recent announcement, the billionaire offered to foot the bill for users to sue their bosses if they think they've been treated unfairly for posting on X. And he says there's no limit to those funds despite plunging advertising revenues. Al Jazeera's Victoria Gatenby reports.
It's one of the world's most used social media platforms. Now its billionaire owner Elon Musk says X, formerly known as Twitter, will pay the legal bills of users who've been treated, quote, unfairly by employers because of posting or liking something on the site. So what's behind this announcement at a time when his social media site is struggling?
He's trying to attract attention to himself. He's doing what he always does, which is seek publicity without actually necessarily having any intention, I don't think, of following through on it, because the actual logistical implications of how you would do this are just out of this world.
Elon Musk bought Twitter last year for $44 billion. Turmoil followed after he fired half the workforce. Since his takeover, the company has lost half its advertising revenue. In July, the logo changed. Musk said it was part of his vision to use the app for multiple purposes, including audio, video chatting, and payments.
From a brand or business point of view, it's completely irrational. It's probably the final strike in the complete unwinding of Twitter, and likely going to be good for Elon Musk, because now people will be talking about his X vision, not how much money he's going to be losing on Twitter.
Musk has referred to X as the so-called everything app, powered by artificial intelligence, pushing it closer to Asia's so-called super apps. WeChat in China is one of the region's biggest platforms. It's used as a one-stop app for millions of users' daily needs, well beyond just messaging. Musk is also facing competition from an old adversary. Mark Zuckerberg's Meta, owner of Facebook, launched a rival platform last month called Threads. Musk says monthly users of X reached what he called a high of more than 540 million in July. He says there will be no limit to funding users' legal bills. Victoria Gatenby for Counting the Cost.
To discuss all of this, joining us now from Berlin is Friederike Kalteiner, who's a tech expert, a tech policy expert. Good to have you with us, Friederike. Look, is Elon Musk serious here? Should bosses be worried, or is this just a publicity stunt?
Let's really see this for what it is. It's a publicity stunt. Elon Musk has provided no details whatsoever about what unfairly treated means. He didn't provide any information for how people can get in touch. I think this is a distraction from the real and serious problems that the company is facing.
Yeah, I mean, and talking about those serious problems, I mean, how on earth could he fund this? I mean, there's no way that he can pay legal expenses, which could run into millions and millions if enough people came forward.
Exactly. I think it doesn't even merit a more detailed discussion. It's a distraction, similar to the fist fight that he announced with Elon Musk. And it's a distraction from the problems that the company is facing. People are leaving en masse. A study has shown that the majority of Americans who were on Twitter have sort of reduced their activity or are thinking about leaving in the last 12 months. So that's a real serious problem that the company is facing. And then the other one is, since Elon Musk took over, harassment, incitement to violence have skyrocketed on the platform. And that's a problem for a company that wants to be a trusted public town square.
The Center for Countering Digital Hate published research showing that hate speech and disinformation had been spreading like wildfire on the platform under Musk's ownership. I mean, he does have a serious image problem right now, doesn't he, with X, formerly known as Twitter?
I think it's a bit more than an image problem. So things haven't been rosy at the company formerly known as Twitter for a long time. Since years, organizations like Amnesty International or the London-based NGO Glitch have documented how especially women of color, queer people are disproportionately affected by violence and online hate. So this is a long-standing problem. Now, what Elon Musk has done is one of the first things he did when taking over the company was significantly reducing the trust and safety teams. He eliminated the AI ethics team, and he also reduced the human rights team. So this is a very clear signal, and now we're seeing the consequences.
Okay.
So it's more than an image problem. It drives people off the platform.
And drives advertisers away too, doesn't it? I mean, however you look at it, this rebranding, this takeover has been a disaster in business terms, hasn't it? Can X, formerly known as Twitter, now that's catchy, isn't it? Can it survive all of this?
That's a very, very difficult question to answer, but you're definitely right. This is about much more than human rights. It's about business. No advertiser wants to advertise next to election interference, incitements to violence. This isn't good for brands. And we've seen brands leaving the platform. Now we're seeing people leaving the platform. I think there are two issues here at the root cause. One of them is a real misunderstanding on the side of Musk on what freedom of expression actually means. And then the second one is a gamble. So the gamble is that, first of all, people want an everything app, so an app that you can use for ride shares, for payments. And then the second gamble is that people will trust X, the company formerly known as Twitter, to be that everything brand. And this is a really, really big gamble that I'm not sure is going to work out. Yeah,
you say you're not sure it's going to work out, but this is Elon Musk we're talking about here. At the moment, everything looks disastrous, and this plan for an everything app, turning X into a WeChat, if you like, that does a bit of everything. I mean, what are the chances in 5 years' time of you and I turning around and having to, well, say, well, we got that wrong. He's done really well.
I think what he's missing in the equation is that people need to trust an app that they want to use for everything. And with harassment, and it's still a social media company deep down, and as a social media company, it's not meeting their responsibility. And as a result, people don't feel safe, people don't have trust. And if you want to be the app for everything, you definitely need people and advertisers to trust you.
In the meantime, over at Meta, of course, Mark Zuckerberg has launched Threads, which is a kind of Twitter. It's not there yet. It's lacking many of the features that Twitter has. How much of a threat is that to X, formerly known as Twitter?
I mean, it's clearly a threat. There are all kinds of threats in the form of alternatives like Mastodon, but also blue skies. TikTok has also launched a tech-based sort of communication. So there's lots of competition happening at the moment. So yes, it's a threat, but I think let's not forget what Twitter really was. Twitter really was the town square. It's where movements like Black Lives Matter, Me Too, all emerged. And I think with this fragmentation that we're seeing now, it will be much harder for any of these apps to be this sort of place, the town square, where we're having these kinds of debates.
And what's your gut feeling? Are we witnessing the death throes of a once fine social media platform here? Or will X somehow manage to reinvent itself?
If X wants to reinvent itself as a product that has more features, but it's neglecting the core responsibilities that a social media platform simply has to take on. And I think if it will not work out, the reason that people no longer feel safe and that people don't trust the app are going to contribute to its downfall.
Frederica, great to talk to you on Counting the Cost. Many thanks indeed for being with us.
Of course, anytime.
Pakistan is, of course, one of the world's leading textile producers. It supplies everything from jeans to towels for buyers mainly in the US and Europe. But the industry, which accounts for nearly 60% of exports, has been hit hard by the economic crisis. Many factories have shut down or are no longer running at full capacity. Al Jazeera's Alex Beard reports.
The city of Faisalabad is famous for its factories, but many are struggling to stay open. The price of electricity has increased, making it more expensive to run machinery, and the collapse of Pakistan's currency makes importing raw materials very difficult.
Every day, dozens of factories are closing, hundreds of our workers are becoming jobless. We even don't have the money to give our electricity bill. That is the reason that these factories looks like the graveyard of the machinery. And the reason is that our government, politicians, they are busy in the game of power.
Everyone in the city has felt the impact of the crisis.
Where are we supposed to go? How are we to send our children to school and feed them? We can only work if there's work. The politicians are stuck in their own politics. No one cares about us workers.
Pakistan has lots of poverty and unemployment, and because of this industry, so many of us get work and run our households, especially important for women because there aren't a lot of opportunities generally.
The IMF recently agreed a $3 billion bailout with Pakistan's government, but one of the conditions is an end to energy subsidies. Business leaders are urging the government to protect the textile industries. They say the success or failure of Pakistan's economy could hinge on it. Alex Beard for Counting the Cost.
Joining us now from Karachi in Pakistan is Yusuf M. Farooq, who's an economist and director of research at Chase Securities. Good to have you with us, Yusuf. Are the textile industry's woes purely down to the economic crisis, or are other factors at play?
Okay, so Adrian, the textile is a very large part of Pakistan's economy. It makes up 8.5% of GDP. It's 60% of Pakistan's exports. There are parts of the economic crisis that are going to help the textile sector, and there are parts that are not going to help the textile sector as much. For example, interest rates have gone from 6% to 23%, so that's a very big load on the income statements of textile companies, and it's very difficult to survive at such high interest rates. Secondly, what's happened is that because of IMF conditions, the government has had to increase electricity tariffs to a price that makes it very difficult for some textile firms to survive. On the other hand, what's happened is that there's been significant currency devaluation, which has started to help the industry in some segments, as it makes Pakistani goods slightly cheaper. So it's a mixed bag. The other thing that happened in the last year was import bans. So even though there was currency devaluation, textile firms in the last year were unable to import machinery, unable to replace parts. So the industry went through quite a few issues in the last year. The industry had captured some customers and gotten some customers in COVID that usually used to place orders in Bangladesh and China. But because of COVID and shutdowns over there, Pakistani firms were able to get some customers from those countries. But now, because of higher tariffs, it's getting very difficult to retain those customers.
As you said, the tough conditions imposed on Pakistan by the IMF for that loan are now rippling out right across the economy and affecting everyone in society. What does the government need to do to keep business moving, to incentivize businesses to keep their production levels up?
I think the currency devaluation that has happened over the last year, and before that, is going to help textile exporters become cheaper manufacturers of the goods. But along with that, the government also has to look at interest rates, which are very high right now, which should start falling from February. We feel interest rates could start coming down from February next year. The important thing that the government needs to look at right now is fixing the power sector and reducing theft in the sector, which will allow tariffs to start coming back down again. So theft and transmission and distribution losses are always a big issue in Pakistan. And the government has to fix that so that tariffs can then become lower. The other thing that the government should look at when setting minimum wages is the minimum wage in countries that Pakistani textiles and other industries compete with. So the minimum wages announced after the budget now make Pakistan significantly more expensive than Bangladesh. One of the reasons why Pakistan has to keep a high minimum wage is because Pakistan sets a wheat support price that's higher than the international price.
So what's the outlook, Yusuf, for the people of Pakistan who are suffering a great deal at the moment economically? Is this short-term pain for brighter times just around the corner? You mentioned February being a key date.
The government and the policymakers, they need to stick to a floating exchange rate, which can absorb any shocks that come into the economy. The outlook, we're very positive on the outlook, and I think the worst is now behind us, and now the situation should gradually start improving. There has been massive devaluation. The real effective exchange rate is finally below 100, and it's been there for a while. Pakistan's been posting very small current account surpluses, and with a floating exchange rate and high rates, the external account situation could remain resolved for a while.
Yusuf, great to talk to you on Counting the Cost. Many thanks indeed for being with us.
Thank you for inviting me.
And that is our show for this week. If you'd like to comment on anything that you've seen, you can X me on the platform formerly known as Twitter. I'm at A Finnegan. Try to remember to use the hashtag AJCTC when you do. Or you could drop us a line. Email us at countingthecost@aljazeera.net. There's plenty more for you online at aljazeera.com/CTC. That takes you straight to our page, and there you'll find individual reports, links, and entire episodes for you to catch up on. But that is it for this edition of Counting the Cost. I'm Adrian Finnegan from the whole team here in Doha. Thanks for being with us. The news on Al Jazeera is next.